What do? I trade price trends. That's it. Simple, precise and focused. Hi, my name is Richard Lee and I manage the stockradar.com.au website for you, where we run a quant strategy based on high probability signals to create a trading edge. Stockradar service is designed to help and educate investors on price analysis and the necessary associated knowledge fields of risk management, discipline, systems, behavioural analysis and trading models. All these issues are brought together in a unique trading centre that leads by example to show you how we put it all together in a real live trading process. So here we are today. Minimising risk is my focus today. We'll talk a bit about that later in trading tactics. But firstly, we just go through the overseas markets, look at the ASX 200, go through the Stockradar portfolio and look at some stocks for you and trading tactics. Again, risk is what we're trying to lower all the time to try and create help create our trading edge. Okay, so let's get to the markets. Okay, so what I wanted actually to do today was actually go through a couple of these indices, because I know we've had a bit of a down day last night, but the market's broken out. Dow Jones has broken out again. We've seen some very, very solid volume through here for the last month or so. Momentum's starting to pick up again as well. So it's broken higher again. When we look at the NASDAQ, it's a really similar picture because it's broken higher. We've got this huge weight of volume just pushing this market higher. So there is some selling there, but the price is going higher. So we had a down night last week. Again, not to worry. The trend is up. Everything's okay. It's breaking above R1 on good volume. Momentum's picking up. It looks okay. So let's look at a couple of the other indices. S&P 500. Well, there's not much trouble there. It's just going up and up and up, holding this beautiful trend. Good volume here again. Momentum's still high, and it looks fine. The Russell 2000, which is an even broader market. It shows again, it's been a bit of a consolidation phase since March this year for a fair while, so a few months there. It's now broken free. We've seen a good spike in volume as it broke free. Momentum is just picking up from above the zero level. So all this is pointing to the fact that these markets are still strong. There's no technical reason to think about these trends aren't going to remain intact. Okay, so that's where we are with those indices, which looks good. And we're just going to divert our little routine to go straight to the AXGAO now, just so we can have a look at what we're doing. So we're also going high. We've had a little bit of a corrective phase here. There's been a little bit of volume on this downward slide here as well. So this can be a good and bad thing. We've got to be wary of it, but if the buyers can hold the price as they are at the moment, then it's still a very good sign for the market. So the ASX 200 is still trending higher, just hit the average, holding above it. MACD is above zero, holding well, so it still looks okay at the moment, no need to worry. So I'll just go back to the commodities for you now. Now oil prices had a little bit of the sellers are making their presence felt, put it that way. Up at this R1 level, we've had a huge rally over the last year and a half. We see some selling coming in here. Momentum still bullish and holding above zero. So there's no problem with the trend. We just got a little bit of selling here, and if the buyers can hold that, then that's not a bad sign. But if it starts coming down, then we worry. So for the moment, there's no real technical damage to the pitch. It's above the average. Volume's a little bit of a warning sign. There's been volume both sides here, good on the up and also here. So plenty of activity going on there, and momentum still stays okay. The other two ones, copper, which is still rotating in a trading range. Not a lot to say about this one today. We just have to wait for this to resolve itself. There certainly is some selling appearing here. Okay, so we can see that there. And momentum's certainly gone out of it, but it still holds just above the zero level. So it ain't over yet, but we're wary. Okay, so that's copper. And now we go to gold, which has had a bit of a spike the last couple of days. And we've seen it run up through this first little high point here. No real evidence here. This is fairly good support, I guess, is what we're trying to say. The volume hasn't jumped hugely, so we're still really rotating in here. It's got a lot of work to do on the upside before I'll be looking for this the gold price to continue higher. Okay, so that's the commodities, that's the indices. I looked at the XJO quickly, just to go through some of the figures on the XJO. The portfolio is back up again 5 this week. We're seeing a bit of rotation in the market at the moment, which is quite interesting. So you can see all the stock that I hold in the trading centre, which ones I don't, which ones have come out and in. But we were down 9 last week, we're up 5 again this week to 72, 188 covered, of which they are 167 stocks and 21 ETFs. The 5 out of 5 stock is full, so the 5 stock is full, the 10 stock has 8 stocks in it, and the 20 stock conservative portfolio has jumped back to from 6 to 8 this week as 2 big stocks come in there, which is also quite interesting. The sectors, property and internet at the top there. The banks have come off a little bit. Westpac's a bit of a problem there. Bendigo, Bank of Queensland have all sort of come off a little bit, while NAB keeps going higher. So we'll have a look at that one a bit later on. The portfolio that we've been running since March, they're building our portfolio. This is our controlled high conviction portfolio. It has Orica, Computershare, IPL, car sales and WTC in it, and it's currently sitting at 15.7, up from March this year. So that's the indices. Now I want to go to some stocks for you. Okay, this is always a bit of fun. This is the real juicy part. So firstly, we'll quickly look at JB HiFi, which has, again, it's had a rally, good. We've plenty of selling on this downside here, not quite as much buying, a little bit here last week, but it's right into this zone again. So trend intensity still rates -4, so not hugely optimistic at this stage. So the sellers are certainly, the buyers are certainly challenging the sellers here, but this is a significant area to get through. Whether JB HiFi has the oomph to get through there, we don't really know. We have to really wait and see, okay? So that's JB HiFi at the moment, not a lot of change there. I'm going to go through here now, new highs that we've had recently. This one here, Technology One, has been a great little stock for us. You jumped out of this big trading range and a slight upward bias over the last year or so, but it's jumped out of here, and of course we've seen this good momentum thrust. They don't always happen, but when they do, they're very profitable. So that's what we like to capture. So although we bought this one up here at the opening of the following week, we've now seen some good gains and made new highs again yesterday. So this is a fairly good, what I call a power thrust that ain't over yet by the look of it. Volume has been significantly higher over the last month in this rally, last 2 months. And that means there's also been some selling in there, but the buyers have been soaking it up and pushing the price higher. So momentum is fantastic. So Technology One has been a really good one. Trend intensity rating of 9 as of Friday last week. Okay, so that's Technology One. Now we go for trend reversal, a trend reversal here, and also an interesting situation we have with South32. Now we had a beautiful trend reversal down here from 235 to 40. It's rallied up to nearly $4, and we've got a good trend that's kicked up here. It's unfolded quite well. We had some huge volume here pushing this stock up here. We've had some heavy volume here. It's subsided a bit the last couple of weeks, but now is a situation where you've got to think about protecting your profit. So we've got profit in there. Where do we get out? That's where you set your stop, and when your stop goes off, you get out, and that's exactly what I will do. I have my stop in place. You can see that in the trading centre. And so that's what I'll be watching, and if it goes below there, I get out next week. For the moment, I'll hang on. But you know, we've had a good trend, we've had a good reversal. It's come into a resistance level here at R1 and certainly found the selling. So there's a little bit of a battle going on here at the moment. I don't know what South32's done today, but we just know if it hits our stop, we get out and we protect that profit, because we've got a lot of profit to protect there. So that's a good one. Okay, now, a clear and simple one for you. Now, I haven't done anything in this stock for a long time, the ASX, because it's been in this huge trading range for about 3 years. But finally, we see a breakout. We saw a bit of gathering of momentum here. That's good. That just gives us confidence in what we're doing, what we're looking for. We've had a higher low here. It didn't trade back to the bottom of the trading range. That's a sign of strength. And we've also seen the volume pick up here the last few weeks. So this has been a very good one. So now, this is not an unusual thing. We can all see a new high and what it is. But the trick is then to manage it properly and make a profit, or if it doesn't work out, you make sure you cut your loss to a nice small amount. So you can watch this one for members. You can watch this one, how it unfolds. But here it is. It's had a good breakout. We bought the open this week, and we'll see what happens from here. Good volume, momentum's great, spiking higher, and it's above the average. So this is a fairly significant thing, a bit like Technology One before we saw. It was a big trading range. This is also, say, a 3-year trading range. So this is a significant level, or JB HiFi jumping through its level. It's been tested many times. So these levels are significant. So when they break, that's when you trade them, and it's how you trade them that tells you whether you're going to make a profit, a loss, or whatever's going to happen. So the ASX looks good to me at the moment. Just a confirmation on one of our ETFs that we do cover, which is the Fang. Now it also broke high. This is since it started back in April last year. It's been sideways most of this year, but we've just started to see this break up here. The XMA is starting to turn up, exponential moving average. Volume's not significant, but this is not an issue with ETFs, because they're always market makers to make volume if you need it there. So that's not really a problem with the ETFs. So we look at the moving average, we look at the the momentum index, which has slid right back down. As you know, when this goes sideways, this comes back to zero and hovers along zero. There's no momentum up or down. Now we see a little spike higher, which tells me the momentum is starting to kick higher. So it's a promising thing, above the average, breaking the R1 and momentum kicking higher. So you'd probably get a trend intensity rating of about +9 on this Fang ETF. Okay, now another stock we've looked at for a while. I'm going through quite a few today for you, so I'll try and help you out as much as I can. Helios, okay, it's had a good rally as well. It made a new high back in September last year. It's been a very, very steady rally. We've had a nice little impulse move up here into this resistance level recently, and now we're getting this battle going on between the sellers and the buyers. The sellers hit, pushed the price down, the buyers have come back in a little bit. It's still above the average, so we're sort of in this situation where push and pull. Sellers up here, buyers down here. This is the battleground we're in. We've got a lower high here, which is a bit of a worry, so that's going to put pressure on S1. So really this is a situation we've got profit to protect here, so we make sure we do. We can always buy a new high if it makes a new high, but for the moment I want to protect that profit and put it in the bank. So I'm watching my stop on this one at the moment. So that's Helios. Has been a good returner for us as well. Altium, always interesting stocks, these ones, because the valuations are always a little bit tricky. But here we go, we trade momentum, we're not too concerned about valuations. If a price moves, we want to be on it. So we have another trading range here for you. Altium, its trend intensity rating is +2, so it's in the neutral zone at the moment. However, it's rallying high, it's above the average. Volume's a bit indifferent, as it always is with this stock mostly, except when COVID hit, when there was a big sell-off. We've also got momentum kicking high a little bit here as well, so it's looking strong. So the potential is very good for this trend intensity rating to jump on a breakthrough here. This is the big test. It's got a 1, 2, 3, sort of 4, 5 highs to really ply through there. So all we do is wait and see. We've got a level that triggers an entry, and if that level's hit, then we go with it and we set our stop and we play the game that way. So Altium is looking an interesting one worth watching. Don't ever anticipate, wait for the break, because that's how the strategy has to work. You have to follow your signals for these sorts of strategies, these portfolio strategies to work. So I just sit here and wait till I get the signal on Altium. Okay, Ramsa Health. Don't know if it's having a very good day today somehow. Anyway, we'll watch this one, but it has had a good breakout. I'll just squeeze up this volume because it's a little bit hard to see it from there. There's a big spike up there. So it's been in the trading range for a while. It broke up here back in August, late in August, and it dallied about for a bit, and it finally started to get on its bike, and I think it's released some numbers today that weren't too good, and the market's not too liking it, so we'll wait and see what happens. But we do have some reasonable volume here. Momentum is positive, and it's above the average, and it's broken out of R1, so it's a good sign. So I don't sell just because the figures are bad. I sell because it hits my stop. So I'm just going to wait to see what evolves. The market can do funny things. It can absorb these figures and say, well, this is not so bad, whatever it might be. But for the moment, the knee-jerk reaction is down, so we'll wait and see what happens. But Ramsa Healthcare looks okay. Trend intensity rating is 9. I'll look at that at the end of the week and see where we are at. Okay, now a couple of small stocks that I've been following over the years with you, and this one here has been good to us. This has been good to us. Okay, so Vista, trend intensity rating of 10. It's just been a steady rise ever since COVID. It was actually looking pretty good before COVID. Okay, and then it was at resistance level, but it didn't get through there, and we did get the major sell-off in the volume. But the buyers certainly came back in here, and you can see this heavy volume compared to previously, how this heavy volume here has pushed this stock. Plenty of demand there, which also means they're selling as well. But if the buying is overcoming the selling, that's a good sign. So we've got a trend reversal came through here, and really since that point there at around about $8, it has not looked back. It's now up nearly $22, and it just can't do things wrong. And I've mentioned to you before, my daughter loves Vista. She always goes in there, she buys lots of it, and it is a real niche player doing a very good job in there. So there's a bit of news about it this week. You know, it's doing pretty well, and you know, there's no reason to doubt it won't go higher at the moment, because all the technical pictures are great, the volume's okay, the momentum's okay, it's above the average. There's plenty of demand for this stock, so Vista's doing very well. Just follow these ones with your stop. That's all you need to do. Okay, now Blackmoor is once again, it's a controversial stock, this one, but I just thought we'd look at it. Funny thing is that it actually works, it actually behaves very well on a price basis. And if you look at what I've got to show you here, you'll understand why. Firstly, I always look at the stock cycle as a background to what I'm doing. So the stock cycle goes downtrend, followed by accumulation, followed by uptrend, followed by distribution, and then back into downtrend, and the cycle goes on. And these cycles can be small, large, and they can differ in shape and size. So be a little bit careful what you're doing. But here we can see clearly the downtrend for Blackmoor's, which is coming down here, came from about 170 down to about 60, so a fairly hefty chop. But then it went sideways since the end of 2019. It's been travelling above the S2, above the $60 level, and just below the $85 level until till a couple of months ago when we saw a sharp break up through here. I've been waiting for this for a while. I thought it might come here. It didn't. Came back, but again it's got through here. We've seen some good volume here. Momentum has now started to push into positive territory. Okay, so this is now potentially entering a trending phase. Now, I know there's all sorts of shuffling going on the boards and all sorts of things at the moment, and everyone's got an opinion on Blackmoor's, but all I do then is I look at price, and price is starting to go higher again, so this is when I look at this stock. If it starts to trend, then I'm on this stock. So it's an interesting one, Blackmoor's. If you don't like it, don't worry about it. If you're interested, there you go. That's what it looks like at the moment. Trend intensity rating of 9. Okay, finally, to finish off, just a couple of good ones. WiseTech, which we've looked at before, again, just reinforcing the new high situation on any stock is always worth it. Okay, now we made new highs again yesterday. I don't know what it's done today, but we've seen some good volume here. We've seen some great momentum. It's not a price move to argue with. Okay, it's one you lift your stop behind, you follow, because you don't know what's going to happen. And I did indicate before that we have seen a huge growth spurt in WiseTech many years ago, 2017 through to 2019. It then corrected for a couple of years and it's now broken out again, which gives us the idea that we might be in for another strong phase. And it's certainly not doubting us, it's certainly been very busy accumulating businesses and broadening its horizon. So it's a very, very good stock, WiseTech, and it is going up. Okay, just to finish off finally, NAB. Well, finally, it's really come back into favour. So we know CBA has been the outstanding one. Westpac's just had a little bit of a problem, so it's fallen out. But now we've got NAB produce some results that perhaps surprised people a little bit. But we've now got this. We've had this beautiful trend this beautiful trend reversal we saw in all the banks back late last year. So we've been in all the banks apart from Westpac, which fell out a couple of weeks ago or last week. But NAB consolidated here. It looks like it was going to break down, but it held up, rallied, and now we're testing R1, which is another key resistance level. The next level up is about $40, next resistance level. So NAB is, it's up there at $40. So NAB is trend intensity rating of +8 and looking very strong here. The volume is quite good. Momentum is just sneaking higher again. So this one here could be a sneaky performer. You never know. All I do is hold with the trend and I just keep putting my stop below there as this continues higher. Okay, that's the easy one I do. Westpac, I'm not even going to look at it. Fell out a couple of weeks ago last week and doesn't look very happy at all at the moment, despite the other banks doing okay. So that's the stocks I've got for you today. There's plenty of ammunition there for you, plenty to think about. Remember, if you want to look at some more stocks, go to the website, take a trial, sign up, whatever you like to do. But it's all there for you to see at stockradar.com.au. Okay, so that's NAB. So now let's go to our little risk minimizer, which is what we're all trying to do. So there are all sorts of different ways we can do this, but lowering risk is very important if we want to stay in the game. Especially when your stocks aren't doing too well. As long as you're not losing too much money, the main thing is you keep your capital preserved and in place to ride a bump higher. Okay, so risk. How do I do it? What do I look for when I'm looking for risk? Okay, we all know about the predetermined stops, which I go on about all the time, which is so important to me. But I also, most of my clients run their own superannuation funds, so they're fairly conservative. They're fairly, they want to make sure their capital stays intact, but they're also very keen and keen on taking control of what they do and doing it themselves. So I focus on the top 200 because it's a riskless area. The small cap area is a great area for a lot of people. It's not my cup of tea because the volatility is too great. So for my trend my trend approach, the ASX 200 is a good place for me to work in. Plenty of money to be made there, and you can see there's plenty of stocks going up. You don't need to go too far down the scale, market cap scale, to make money. The other thing is weighting balances. I don't want to put all my eggs in one basket in that sort of situation. I want to make sure that I have a couple of banks and I have a couple of mines, whatever. I have a spread through the stock portfolio. Even if it's only a 5-stock portfolio, I don't have 5 banks. Okay, so that's a weighting balance. It's a tangible thing. Now to the intangible. And this is an interesting thing that you really should have a listen to. Know yourself and know your weakness, because you are in fact the biggest risk in a trading environment, because if you don't follow your plan, you are not doing the right thing by your trading. Okay, so it's important that you take all your signals, you follow your stops, you take your entries, whatever your system is. Remember what I say to you: know why you buy and you know what to buy. Know why you sell and you know what to sell. That's the key thing. So have that sort of system in place, and you must have the discipline to follow it. Okay, so you are one of the biggest risks. Remember that. Focus on probabilities. I don't catch falling knives or whatever it might be. So I'm taking probabilities of price being above the average, breaking out, momentum being positive, volume being good, these sorts of things. I'm putting all those, using my trend intensity indicator to create my probabilities of this happening, more likely to happen than that. Okay, so that's my intangible area. Okay, the next one is, and of course it is the stop. Okay, I just want to talk a little bit about the stop at the end here, because it's very, very important. Okay. Stockradar's premise, my premise is basically that there are 4 potential outcomes of a trade. Big wins, small losses, small wins, small losses, big losses. If I can eliminate the big losses, then I'm left with this here, and it really is going to bias my profitability to the upside. So your stop will protect you if you let it. If you don't want to take big losses, you don't have to take them. It is up to you. Remember, minimizing risk, you are the biggest weakness unless you follow your plan. Okay, you can also be its biggest strength if you do it the right way. Okay, so that's the risk side of things. So limiting losses to a predetermined percentage means you don't ever take big losses, and I never do. Okay, you might take a few more, but I always keep them small, because it's the big ones that kill you. And I've shown you, I think in the newsletter last week and in the YouTube video a couple of weeks ago, clawing back from those losses, losing 50% means you've got to make 100% to get your money back. So you don't want to lose money. Okay, so it's very important. Okay, so minimising risk, just do it, is what you need to do. Okay, so that's how that works. Okay, so to finish off today, at Stockradar we try to leverage our successes and chop our failures. And this ekes out a return on our investment. It's a simple, low-risk strategy, really simple. Lowering risk means trading safer, and that's important. Keeping an eye on the ball each week means you can manage your risk better. We reset all our trading stock price levels and trend intensity rating each week, which keeps you up to date and control and psychologically in balance, and that's important, so you can make better decisions. Psychologically in balance, so you can manage your trading with confidence, clarity, perspective, and a higher probability of success, which is important. So good luck for your trading this week. Thanks for listening. I hope you all learned something today, and I'll see you all next week.